Man, the roads were quiet this week driving into the office. So I want to wish all of you guys a happy Thanksgiving. Hopefully you guys are enjoying some family time. Personally, I'm going to be braving Disneyland in a few days, so wish me luck. But anyways, wanted to quickly run through what we're seeing with rates. I know we saw a decent treasury drop last week, and that reflected in the residential rates of a 0.5 point interest rate drop, but so sadly, not so much with multifamily and commercial. So our lenders typically tend to be a little bit slower to increase rates and to drop rates. So we saw very little movement. We have a couple of lenders that are tied to treasuries, but the problem that I'm seeing with the lenders that are tied to treasuries, including the agencies, is they keep raising their spreads. So what does that mean? That means that our banks and lenders are not comfortable right now with what's happening in the market. There's a lot of uncertainty. Banks don't like uncertainty. They want safety. So I'm seeing that rates are artificially higher than they really need to be. I'd say about 50 basis points higher. So there is room in the margin. The margin's really, really healthy right now. What I think we need to see is a pivot from the Fed and a little bit of time. So even when, not if, when the Fed pivots, I think that rates may stay the same for a few weeks because banks want to make sure this is like a real thing. Like right now, banks are pretty confident that the treasuries are just going to go right back up, right? The Fed's going to do another raise this month or in December. So, rates are probably going to just go back up. So why drop them now? And we're in the holiday season. It's the slowest part of the year. So when the Fed pivots, I think that that's what banks are going to need in order to start dropping their margins and to start seeing interest rates come down a bit. That said, in terms of the market, if you're in the market to buy a property, I've been saying for the last couple of months that there's a disconnect between buyers and sellers. Sellers still want this high price and buyers are not willing to pay it because obviously it makes no sense. I mean, buying a 4 cap at a 6.25 interest rate does not make any sense. So I am starting to see now though that sellers are becoming a little bit more willing to negotiate. If they want to sell their property, they're going to have to compromise, right? So I'm starting to see some of that gap shorten a bit. But we still have a ways to go. So I am predicting that at the beginning of next year that you will start to see sellers become a little bit more flexible if they want to sell their property. So I think there will be some opportunities out there for buyers. Financing is obviously still not the 3% range that we were in. We're over double that. But there will be some opportunities. It will be reflected in price. There is no way that cap rates can stay this low with interest rates this high. They've got to get closer together at the very minimum. So if cap rates aren't going to 6 or 6.5, I think they're going to have to come very close to that in order for deals to start making sense. But you guys, again, have a fabulous Thanksgiving, and I will see you next week.